One of the reasons why I said 2026 is because I think that's when we'll have a final top in gold, a final bottom in fiat currencies, and they'll have to come up with something new. If you read about the Great Depression, when the banks shut, all the markets shut as well. And that's why you need to have, I think, gold and silver before that happens, because if you don't, then you're going to lose out.
Hello and welcome to the VRIC Media YouTube channel, where our mission is to educate you on how to make money in the commodity sector. Today, I'm very glad to be joined by Mario Innecco, a former government bond salesman turned YouTuber who has amassed millions of views over the last 8 years due to his illuminating insights about gold, silver, and macroeconomics more broadly. Mario, it's a pleasure to have you on today. Perhaps you could start by explaining your career journey and how you arrived at your conviction for gold and silver.
Yeah, my career journey is I studied economics and international relations. That's my degree and I finished it in Geneva, Switzerland, and then I eventually got a job in a small private bank. It wasn't right away. Some people nowadays say, well, it's hard for young people to get jobs. But I remember at the time, in the late 80s, things weren't that great either. But anyway, I started a small private bank. The business there was a lot of it mostly was bonds. My bosses were bond people, but we did other things as well, like foreign exchange, stocks, commodities, futures, options. So it gave me a good base of the fundamentals. And then I was kind of headhunted by a friend to come and work in London for a bond broker, government bond broker. And then I got involved also in futures and options and government bonds. And at the time, early 90s, mid 90s, I didn't even really follow gold that much or anything like that. The only thing I knew about gold was that I was told by one of my economics professors that Nixon closed the gold window in 1971, but that was in passing. He didn't elaborate anymore. He just said that. So didn't really look into gold that much, except when I started looking into free markets and small government, and I read Atlas Shrugged in the late 90s. And the reason I started reading that was because as my career in the city was progressing, I was doing well. I was earning more money as the years went by. And I couldn't understand why I had to give so much to the government, because I thought I should be the person to look after my money, not some politician who knows nothing about what I do. And that's the reason I started looking into free markets, the Austrian school, and then after the dot-com bubble burst, I saw that my private pension went down quite a bit, and my wife and I were talking, and we said, why don't we buy some gold coins? And that was 2002, and that's when I first bought some Krugerrands, and I'd never held bullion or gold coins before, and it was like my eureka moment, and it got me into looking at gold and why I'd never been told about gold, and that's where it started, really. And at the time, we had Bernanke, who was just coming into the fore. He wasn't the chairman yet of the Federal Reserve, but he was up and coming, and he made a speech in November 2002. It was his helicopter speech, so to speak. And I knew after he made that speech that I had to hold on to my Krugerrands or try to get even more. And looking back, I wish I'd gotten a lot more, but it's always hard because gold is like saving. That's all it is. And yeah, it's hard having the discipline. So that's how I started. And I worked in the city for another 10 years after '02. I survived through the '08 crisis. But then, the department that I worked for at the last firm I worked, they closed the desk down, and I tried. I tried my own business. I did try to get back into the city, but I was around 48 then, and it was hard. And I went for a few interviews, and I was told, "Oh, you've got too much experience." So I tried a franchise in pawnbroking because
Okay.
there's a lot of gold and silver involved. Scrapping gold and silver. I learned a lot as well about jewelry and stuff like that. But and it didn't do badly. The business grew, but it was on the high street, so the costs were quite big. So after 2.5 years, we decided to close it down. And then in late 2015, I thought to myself, I'm gonna start talking about um, the markets, how I used to speak with my institutional clients, that because my clients in the city were not like private clients. And I thought, if I can tell the general public how markets work in the easier way, in the easier fashion, I think it would be of some value. And I also wanted to expose the fiat currency system that I'd learned since late 90s, early 2000s, how bad a system it was, and how it led to big government and Keynesian economics and all the debt. And and unfortunately, that's the way the world has been going. More and more debt, more inflation. So that's my story,
Mm.
really, up to now.
Mm. Absolutely, no, it's a great story, and it's thanks to people like you, and I mentioned David Morgan, Ronnie Stoffler, and people like that who create these educational resources that help me to wake up to the gold and silver reality, and the reality of fiat currency debasement, and fractional reserve banking, all these different themes that I didn't actually learn at university. So I'm grateful to have you on, and of course we're going to talk about something that's quite topical at the moment, relevant to gold and silver, but more to do with the currency markets. It's obviously the yen carry trade I'm referencing in particular. Now, in your latest video, which I think you released this morning, you state that the yen carry trade could be the straw that breaks the camel's back of the world's financial system. Now, for the record, I don't think you're actually being hyperbolic with your assessment of that. But for the benefit of our viewers, it would be great if you could summarize what the yen carry trade is in layman's terms, how you see it evolving, and why you think it presents such a risk to the global financial system.
Well, ever since the early 90s, the Japan, its government and the central bank, they've been on a, how can I say, on a route to debasing the currency, artificially pumping credit into the system, increasing fiscal policy, because they bought into the Keynesian mentality 110%, I would say. And instead of allowing the bubble that we saw in Japan in the 80s and up until, 1990, the real estate and stock market bubble, instead of letting it liquidate and clear all the debts, let the banks collapse and come back and stronger. What they've done is they've kept interest rate artificially low. They are the ones who started QE, and by 2010, 11, after the '08 crisis, unfortunately for them, for their policy, the yen started strengthening, which is a bad thing as far as the carry trade is concerned. So when Prime Minister Abe won the election in December 2012, he instituted what's known now as Abenomics, which was basically more money printing, more fiscal spending, and they added structural reform just to pretend that they were going to, do something about it. But it's mostly money printing and government spending, fiscal policy, and that's what has kept the yen so weak since 2012, 2013. The dollar went from 80 yen to 162 back in July. So it more than doubled. And the Japanese, up until recently, the BOJ kept rates negative, the short-term rates. So what the whole world was doing, and also Japanese investors they were selling the yen uh, and buying other currencies that were yielding more. And by selling the yen, you're actually borrowing the yen in the FX market. And if you borrow for nothing or negative, it's a good deal. And if the yen keeps weakening, that's fine. Yeah, you can keep your positions of your stocks, bonds, commodities, and everyone's doing really well. And the other thing, Ted, about our current fiat currency system is that there's always a lot of leverage. So you have to think this is not just someone borrowing 1 million yen and then that they have that $1 million in yen that they have. No, they'll take the $1 million and they'll leverage it into $10 million, and then they will sell the yen and get the proceeds of $10 million. So it's highly leveraged. But the only problem is when the yen starts turning, if it strengthens. And the Bank of Japan had a problem already last year, that the yen was weakening a little too fast. Cost of living has gone up a lot in Japan, even though they keep going on about deflation. We even saw that the prime minister just announced that he's going to resign as the leader of his party because there's political instability. So when the yen was weakening too quickly, the Bank of Japan had to do something. So they raised rates twice this year, from negative to 0.25, which isn't much, but that's what caused this huge turn in the dollar, lower from above 160 to 141 a couple of weeks ago. And that strengthened the yen, and everyone that had been shorting yen or borrowing yen, they had huge losses, because if they hadn't hedged, they had to buy back the yen because it was getting more and more valuable. And when they do that, they had to sell the positions they had in the assets in other currencies. And that's the whole problem with the Japanese yen carry trade. And it's something that's been done by Japanese investors and investors all around the world. And Japan is a huge economy. It's the third biggest economy. It's a very liquid market. And I mean, you can't have, let's say, a Pakistani carry trade if Pakistan decided to have negative rates, because the capital markets there are not really developed. But when it's Japan, it's huge. And I don't think, yeah, go ahead.
I was just going to say, what happens ultimately when the Fed cuts, which it likely will do in September? What do you think the consequences will be then? Will this arbitrage opportunity unravel further?
Yeah, I think it's one of the reasons why we've seen this happen already. Is there's expectation that the Fed will be cutting. I think is probably priced in a bit already. But the problem is that the Japanese central bank, the BOJ, they've waited and dragged their feet for so long to start even tightening policy. They should have been tightening like when the other central banks were tightening, and maybe now they could be like cutting as well. But they didn't even do that, and they're just starting to hike, and it's a huge problem. Yeah, I agree. And we saw that on August 5th. That was a Monday. The week before, the BOJ raised rates from 0.1 to 0.25, which isn't much. And it caused havoc in the markets. The Nikkei dropped 13.5% on August 5th. The NASDAQ was down 1,200 points pre-market. The dollar collapsed down to 141. And that was just from 0.15. And they're still doing like $40 billion equivalent every month of QE as well. People forget that. So yeah, and I've been warning about this,
Yeah.
I guess, for quite a few years. I even have my playlist going back because I could tell eventually it was going to become a problem, and I think we are near the end of the road for this. What it will mean, I don't know, but it's going to create huge problems, not just in Japan, but all around the Western financial system.
Absolutely. Yeah. And
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
the plot really thickens in terms of the issues facing the global economy today. If we stay in Asia, I wanted to shift from the yen to the yuan. More specifically, there's a video you created, I think, a few years ago, which was titled "The PetroYuan Continues to Chip Away at Petrodollar Supremacy." Now, just last month, we saw evidence of this theory coming to fruition as China and Saudi Arabia signed this multi-billion-dollar agreement to relocate Chinese EV manufacturing to the kingdom. But of course, this is not the only example of strengthening ties between China and Saudi Arabia. We saw this currency swap agreement worth, I think, $5.3 billion back in 2022. So I know you've released a lot of videos about the petrodollar and the petrodollar files, I think you called it, but would you say we're heading towards a day where the petrodollar gets replaced by the petro-yuan? And if so, what would be the consequences for the US dollar and the global economy?
Yeah, the petrodollar, I've been talking about it for quite a few years as well, 2017, I think. And one of the reasons that for which I was talking about it is that in China, they were setting up infrastructure in the form of commodities exchanges, like the gold Shanghai Gold Exchange, the futures exchange, where you could from abroad come in and sell yuan for gold and take delivery and take the gold back, and you could trade all other commodities. And I could see it back then that the Chinese were preparing to make the yuan more of a international and trading currency. And the other reason was because of all the sanctions that we were already seeing, like against countries like Russia and other places, that eventually the dollar was becoming more of a political weapon. And also '08, I think the crisis of '08, the Chinese, excuse me, they had to kind of, people forget, they bailed out the mortgage-backed security market in the US because they went in, they did loads of QE as well to help the system. And I think they saw this system is very fragile. We almost lost all our bond investments in the US. And so they wanted an alternative. But I said in 2017 that the petrodollar was like a super tanker. You're not going to shift the course of the petrodollar overnight. It was going to take a few years. And Saudi Arabia, they're instrumental in the petrodollar deal. Some people think that they haven't renewed it this June. I'm not sure if they haven't renewed it or not. I haven't seen any announcements. But the fact that not just China, but Russia and a lot of other countries are want to deal with Saudi Arabia with their own currencies tells me that more and more people want to move away from the petrodollar because if you and I are dealing, for example, and we have our own currency, and you buy something from me, I'll pay you with Butler dollars. If you buy something from me, you pay with Innecco dollars. Why should we use another currency? And I think that's what countries are seeing. And in terms of gold, the importance of gold in this will be that they need a good base to make those currencies credible. So I'm not even sure the Chinese want to have a PetroYuan. They just want to be able to deal with other countries in their own currency. If they want to buy oil from Saudi Arabia, they will use the yuan. They could use the rial. If they want to buy oil from Russia, they could use rubles and then use gold as a settlement instrument, whereby if you have some kind of deficit or surplus in the particular fiscal period, you settle it with gold. And yeah, that's how I see it. And I think the whole world's moving more towards like a system where there's the major reserve will be gold and everyone uses their own currencies. I mean, it would be great if they also peg their currencies to gold and that you could actually take 1,000 yuan to the bank and get a gold coin. I don't think they're going to do that though. But this is more of the reason I talk about this is more to try to warn the people in the US and the UK and Western Europe that what this will do will lower the demand for dollars, pounds, and euros because these countries are not going to hold as many of these currencies in reserve. They're going to hold more gold and maybe other currencies. And when that happens, the value of our currencies goes down, and that's what I've been warning about as well, and that's why we're seeing new all-time highs, I think, versus gold for not just Western currencies, but even other currencies like the yuan.
Absolutely, and I think one of the things I've noticed is that perhaps there didn't need to be a petrodollar written agreement. Ultimately, it's enforced by the military-industrial complex of the US. And so long as Saudi Arabia continues to receive arms, perhaps, it may just continue to operate on the US dollar basis. But then on the other side of things, you've got now China is Saudi Arabia's most important and largest economic partner. So if China can actually offer more to Saudi Arabia than the US, for example, we could see a situation where Saudi Arabia's, torn between both, and perhaps it's already siding with Saudi Arabia, in which case, you talk about, I don't think it would be the Chinese yuan because of the liquidity and the tight capital controls in China. But I certainly see a situation where perhaps a collective BRICS currency could replace the dollar. I mean, what do you think of that? I mean, we've seen about Project M Bridge and all these different various things that, the Russian finance minister talking about gold 3.0, the BRICS talking about moving towards local currencies first, which perhaps is the first step towards a gold-backed currency. Are you seeing anything that would suggest that the plans for a gold-backed currency are concrete?
Yeah, I mean, some of the Russian officials, economists, have been talking about it, and they call it the unit as well. But I think it would take I'm not sure there will be a single BRICS currency. I think it's more a mechanism like in the 19th century, like the gold standard, where countries, and it lasted quite a long time, like 100 years from the end of Napoleonic Wars to World War I, and it functioned quite well. As far as the defense situation for Saudi Arabia, don't know if you remember when the US left Afghanistan in 2021. It was a huge mess. And I think a lot of countries, especially like Saudi Arabia, they were concerned because the United States is supposed to be there. They're supposed to be their policemen for Saudi Arabia. They're supposed to be there protecting the kingdom. That's part of the petrodollar deal. And it's interesting that the week after the U.S. left Afghanistan and left it a mess, was a debacle. The Russians met with the Saudis and signed a security cooperation agreement, and I think that's significant. So I think the Saudis, they're not silly. They're not going to say we're going to give up on the dollar and we don't want to know about the U.S. anymore. They're just hedging their bets. I think there was also a Saudi official last year at the World Economic Forum, or it could have been this year, I'm not sure, who said that, yes, we're going to keep dealing in dollars, but we going to accept other currencies as well. So that's what I see happening there. And we're already seeing the Chinese as well get rid of a lot of their treasury reserves. That's been coming down quite a bit. The Russians, of course, they've had their reserves.
Well, they had no choice, yeah.
Yeah, and they're having the interest that they earn on those reserves really stolen. There's no two ways about it. The EU might want to call it like, I think Janet Yellen also said, oh, if you have a bond and the bond earns a return, that return's not yours, so that's why we can take it from Russia. And I think that's a huge incentive, not just for Russia, but for other countries to make sure that they don't bank with the U.S., because that's what having U.S. Treasury or Treasury reserves or dollar reserves is. You're banking with the U.S., but if your banker is going to freeze you, just like they did, like Coots did with Nigel Farage, you're going to look for a new bank.
Yes. No, it's absolutely true. And it's almost as if all these factors are coming together and pointing towards this theme of a currency reset, with the yen carry trade unresolved and with the sun setting on the petrodollar. So I know you discussed this, in fact, on your YouTube channel with Clive Thompson, and that video about the currency resets gained over 500,000 views. And then I think more recently you made a video predicting that a currency reset would take place in January 2026, which you did based on a historical analysis of previous resets. Yeah, it would be great if you could expand on your rationale behind that and perhaps shed some light on the actual process of a currency reset in terms of how you think it would affect the money in people's bank accounts today.
Yeah, I mean, back in 1934, when the dollar was fixed to gold, we had like a gold standard. There was a currency reset, and it was overnight. I think it was January 31st, 1934, and Roosevelt revalued gold from $20.67 per troy ounce to $35. So that was overnight. But I've said in the past that ever since the beginning of this century, if you look at the Dow gold ratio, in 99, 2000, at the top of the dot-com bubble, you needed over 40 ounces of gold to buy one Dow. And it's been going down ever since, even though we've had a rally in the Dow versus gold ever since the low in 2011, around 6.5. But now it's starting to keel over. So the fact that we're not under a gold standard anymore, we have free floating currencies, free floating gold prices. I think the reset is just something gradual that keeps happening. And one of the reasons why I said 2026 is because I think that's when when we'll have like a final top in gold, the final bottom in fiat currencies, and they'll have to come up with something new, a new system, and then the reset will be complete. Clive, on the other hand, in that video, and that's his opinion, and it's also possible, he seems to think that they could also, instead of doing it through the market, They could come out on a Sunday and say the markets are going to be shut for the next 2 weeks. The banks are going to be shut, and they could have had like a crisis. I don't know, some cyber attack, which they could blame on Iran or Russia, and that would be the excuse. And then after 2 weeks, they'll come out and say, well, all the pounds, all the pounds that you have, you can keep them, but you can't use them anymore. You're going to have to take this new currency. That's Clive's view of a reset, and that's possible if things get really bad. But if they're able to keep it going, muddle through, then we could have this continuous reset in the markets. And if you look at 2001, 1 ounce of gold was $250, and now we're at $2,500. So it's resetting. It's been resetting for the last 24 years. And I think that's the way they're going to do it, even though Clive's scenario is possible as well, where we could be, let's say, near a juncture where things are really bad, where gold is going through the roof, silver is going through the roof, and all currencies are going down. Cost of living is going up. They could come out and announce some kind of bank holiday. And if you read about the Great Depression, when the bank shut, all the markets shut as well. So, and that's why you need to have, I think, gold and silver before that happens, because if you don't, then you're going to lose out.
That's absolutely true. And that's part of the reason that I do what I do is raising awareness of that. It's very possible, especially if we consider what's going on in the UK at the moment, with all the social division and the decay of this immigration issue that just seems to have been projected onto the people to keep them distracted from the reality of what's going on. They could easily, in the interests of monetary and social stability, we're imposing this new digital currency. We promise it's going to be really more convenient. It's going to be safe. It's going to be the answer to all the problems that we're facing in society today. Do you think that, I don't know, do you think the US or UK population would accept that? Or do you think there'll be a backlash, a protest? Like, I think it's, for example, I think there would certainly need to be some kind of incentive to be onboarded onto this new CBDC or whatever. Perhaps the government says, we'll give you £1,000, £2,000, almost like what do they call it? Is it social credit or whatever, where they give you
UBI?
Yeah, universal basic income, where they give you free money. Do you think that's a reality?
Well, I think they'll definitely try it, but whether it will succeed, I'm not sure. They did that. I always like to look at history as well. And during revolutionary France, they did their own QE, and it was assignats. And they were backed by church land that they confiscated from the Catholic Church. They confiscated land from the nobility, which and still the assignats ended up worthless. And then they had another currency to replace the assignats, so kind of like a CBDC of their day. It wasn't digital, of course, but it was the mandat territorial, and that currency didn't even get off the ground. It was already worthless when they started issuing it because people wouldn't buy it. So they might be able to bring out CBDC, and people might be so desperate that they will accept the free UBI. But I'm not sure it would work, because people who are thinking people who had maybe started looking into the system and maybe started buying some gold, but not that much, because they saw as well. The other thing as well, Ted, is that people don't think there's a problem because the stock market keeps going up. So they think, oh, everything's fine. But I saw the other day that the best performing stock market this year is the Istanbul exchange. But it's up like 31%, but the lira is down 39% versus gold. So I think people would wake up, and I don't think I think CBDCs would be dead on arrival,
That's
unless.
very, very optimistic of you. I guess the alternative, which perhaps you were going to say, is that people don't have a choice, and that it's the big corporations get behind it and they say, you're not going to be paid unless you want to be paid in the CBDC that the UK or US government wants to be paid. And that would be quite a dystopian reality, to be honest.
Yeah, but what if the CBDC? What if people don't have faith in that CBDC? Those big corporations that go along with it, they're going to be in trouble as well. So I think the only way it would work would be to have a gold-backed CBDC, um, which is not ideal either, because I think we need to go back to real money, gold and silver coinage,
Yeah.
because CBDCs are another intrusion into our privacy and freedom. And they say, oh, you don't have anything to worry about if you don't do anything wrong. But I mean, governments always abuse that power.
No, it's absolutely true. And I think it would come in like a Trojan horse. It would be under the guise of stability, like I say, and convenience. But really, it's quite a dark thing. But anyway, we talk about gold and we talk about currency resets, but it's obviously very difficult to choreograph exactly when one would be in the absence of a crystal ball. But what we can be pretty sure about is that in the meantime, so long as this macroeconomic uncertainty and the lack of clarity persists, that gold will continue to thrive. And we saw that last week. That was plain for all to see. Gold price closing above $2,500 despite the market chaos in Japan. But I felt that this was quite a discrete all-time high. Nobody really seemed to notice. So I'm curious to know, what would you put that recent gold price rise down to? And as an extension, where do you see the gold price going towards the end of this year and into 2030?
Yeah, I mean, there's a lot of there's no real excitement or hype about the gold market,
which I like.
Yeah, which is a good sign. It means that, and I think what gold is telling us is that investors are starting to lose confidence in the central banks, and also losing confidence in governments and their fiscal policy. Look at the U.S. Whoever becomes president, both candidates are promising the world. I saw President Trump said he wants to build 10 cities, new cities, and he wants to have baby bonuses, and that Congress would back that. He's already said that he's going to keep the commitment towards Social Security, Medicare, and Medicaid, which is the liabilities run into hundreds of trillions. And then you have the other candidate, Harris, saying that she wants to also provide $25,000 for first-time home buyers. She's going to also, I think, cancel some kind of debts, student debts or other debts. I mean, no one's talking about reining in spending and reining in the size of government. So, and here in the UK as well, the new administration, they've already given in to the unions. They've given them huge double-digit pay rises, and that's led to other unions coming on strike because they know or threatening strikes because they know if they do, the government is going to cave in. And the other thing as well is that governments have become so big, their debts are so big, the cost of borrowing has gone up so much in the last few years that it's crowding out the private sector. And when that happens, unfortunately, our leaders, the only thing they know how to do is more and more Keynesian medicine, which is more spending, more borrowing. And I think that's what gold is telling us. I mean, gold is up over 20% in all the major currencies. Maybe against the pound is only 19, but it's double the average that we've seen since the year 2000 per annum, which is around 9 or 10%. As where gold will go by the end of the year, I don't like, as I said, it's difficult to predict, but looking at the charts, if I had to uh, give you a figure, I could see us towards going at least to 28, maybe 2,900 before the end of the year. Where it ends, I mean, it could correct back to 2,600, 25. Who knows? And I think it's going to get more and more. Well, it's not gold that's getting more and more volatile, but the fiat currencies.
Yeah.
And yeah, you just need to. I mean, what I do when things get choppy and volatile is just to think, what's the alternative? What I can, if I don't want to have gold and silver anymore, well, it's exchange it for fiat currency and put it in the bank. That's probably not very safe. So that's what I always tell myself when I get a little bit discouraged. And of course, there are people, of course, who unfortunately, are going to need to sell some of their gold and silver for emergencies because gold and silver are like savings for a rainy day.
Mm. And yeah, those are really good points. My thing in terms of future catalyst for the gold price would be, the family offices haven't really come in yet, and I think if we get that institutional side of things, especially in response to a Fed rate cut, like we could just only be getting started. Let's not forget that the gold market's been driven by unconventional forces really in the last few years with central bank buying from the East. So there's absolutely more room for the gold price to increase. And I think you're right with 2,800 for the end of this year. I would probably agree with that. Now, we would also be doing a disservice to our viewers, Mario, if we failed to cover gold's little brother, silver. So on the demand side, we recently saw this explosive jump in China's silver imports, which is almost definitely a sign that President Xi has been doubling down on the solar panel manufacturing, which obviously consumes a lot of silver. And yet, even despite this robust demand and the 4 consecutive years of supply deficits, the silver price is still lagging gold. It's still trading at just under $29 last time I checked. And so naturally, I'd like to know why you think the silver price is stagnating and whether you have any evidence that would suggest silver price manipulation is to blame, as my late namesake, used to cover very, very frequently and very well.
Yeah, I mean, there probably is a little bit of bullion bank shenanigans in the futures market. And the thing about silver is that it's such a small market compared to gold that it's a much easier market to move around. And you mentioned China and the demand for solar panels and photovoltaics. But India as well, I think, was April or
February,
first.
when it was
Yeah,
huge amount.
I mean, they bought more silver in February than they did all of like last year or something.
Yeah,
So
that was it.
there's huge demand. And yeah, I think, yeah, it's been a frustrating market, of course. And we're still not back to where it was in 1980, which was $50. We got there in 2011. And there was a lot of talk about how JP Morgan unloaded a lot of silver when it got up to 50. It's one of the reasons people see think that there is manipulation. And I think there is some. And I think silver is a lot more important than people admit to it being. It's a huge. It's huge in terms of war. Silver is really important in war, and I'm not like rooting for World War III or anything, but have a look around the state of the world right now. There's a lot of wars going on, raging everywhere. They might not be big wars. Well, you could say that it is in Ukraine. And yeah, that's another demand for silver. And investor demand is bigger, like actually in the US than in China. So yeah, and what if the Chinese also start loading up on silver as investment and not just industrial metal? And so if you also believe that we are in a bull market in gold and precious metals, usually silver outperforms. And we have been saying this for the last few years. But once it catches up with, well, catches up or breaks through, I think 30 or 32, we could see silver leading the way. And it happened also back in the early 2000s, because I bought gold in 2002, and it did start taking off in 03, 04, 05, but it was only around 05, 06 that silver really woke up. So it usually takes a little longer. So yeah, I think silver will do really well and it will outperform gold. Does that mean I get rid of my gold and buy silver? No, I just add on to my silver. I like to, yeah, some people might want to get out of gold, some gold and buy silver, but I just tried to get out of fiat currency. That's the way I look at it.
Absolutely. And I think ultimately it's a high beta play on gold, silver. It's like I say, the only metal below the 1980 highs in the group of like copper, zinc, lead, all these other metals. And I think what I would put it down to, Mario, is people's concerns about a recession. Obviously, silver's got that dual component where, you know, it's sort of more correlated to copper than it has been in the past. And I think once those recession clouds start to fade away, I think on the sort of tail end of a recession, I mean, we did this, if you read the Ingolby Trust report, we did an analysis, and in the fifth stage of the recession model, silver goes on to really outperform. And in 6 of the 7 last bull markets, gold bull markets, silver has outperformed gold. So there's no doubt that it will happen. I mean, these things take time. We look at the uranium spot price a few years ago. There was years of prevailing supply deficits, and it took so much time for that to incubate before the price skyrocketed. But now look at it, it's like, you know, $90, and it was, you know, a fraction of that. So I'm still very optimistic about silver, and it's good to see that you are too. One of the other ones, yeah, go on, Mario.
Just wanted to make a point about the 1970s as well. Silver wasn't really didn't do great the whole decade. It was more towards like 78, 79 that it really started taking off. Like it broke through $7, and then it went in like 6 months, it went to $50. So a lot of the move, I would say, in silver will probably happen towards the end of the bull market, and it won't be, if you're not in it, you're not going to profit. It's like in the 70s, if you got in like in 1971, you would have done well till 1975, but then you would have had to wait until 78, 79 to get back to the levels that you saw in the early 70s. And by then you might have given up. And then a year later, it was at 50 and you're probably kicking yourself.
So true. So true. Another one, like I say, we'll probably finish with this, but gold all-time highs, silver soon to follow, we hope. I wanted to ask you about gold and silver miners. You can correct me if I'm wrong, but I think you would agree and say that gold and silver miners are incredibly undervalued right now, especially given that the gap between the all-in sustaining cost and the gold price continues to widen. There's also the fact that acquisition activity seems to be picking up amongst the majors, as I think Clive pointed out in one of your videos. And at the same time, another overlooked thing is that miners have been really diligently reducing the debt on their balance sheets, obviously making themselves a lot more financially healthy and a lot more conducive to investment. So has this been enough for you to be tempted into investing in gold and silver miners? And if so, which companies have you invested in, and what was your rationale for doing so?
Yeah, I mean, there's 2 kinds of companies. There's the junior exploration companies which are a lot more speculative, but they could also benefit from the takeover like aspect. And as as Clive spoke the other day, there are a lot of the major companies looking for these properties. And yeah, the major miners, I think they will do well as well. It's going to be like investing in a bank because gold is going to come back. It's already coming back as a monetary asset. So if you have, I have some Newmont and Barrick. They pay dividends as well. And I'm not telling people they should buy it. I'm just saying what I have.
Yeah.
And silver miners as well, I think is a good way to play the silver market, aside from having physical silver. And yeah, so it gives you a bit of a kick, the miners, because, for example, if gold goes from let's say 2,500 to 2,600, that's $100 more profit that these companies are making, and that has the multiplier effect. As far as risk and how much to put in the miners, it's up to each individual. I personally am quite conservative, so the bulk of my exposure to gold is through physical gold and silver. But I mean, yeah, as I said, it's up to each individual. And also, you have to think about counterparty risk. Let's say if they close the exchange for 2 weeks, if there's a huge crisis, you won't be able to access your holdings, but they'll probably do well anyway when the markets reopen, because they always do. Markets, even during the Great Depression, they open back up. Yeah, I think, yeah, so Newmont, Barrick, I have some Pan American silver. I have some, like, what is it? First Majestic, which hasn't really been doing too well. But I think it's going to be a little bit like the dot-com bubble in the 90s. Anything with dot-com did well. I'm not saying you shouldn't look at different companies and do your research, but things with gold and silver mining, I think there will come a time when they will do well. And the reason I think why they haven't done well, we're still below the levels we saw in the HUY, GDX, GDXJ, below the levels we saw, I think, 2020 or 2021. And way below 2011. I think it's because there's so many other asset classes out there that are still doing well, like the NASDAQ and the cryptocurrencies, that people don't really care much about miners. But I think that will change. And like you said, the family offices are still heavily undervalued in the sector. I think they hold 1% or maybe a little more of their assets in the gold and silver sector. And usually for these kinds of operations or in funds and hedge funds, the easiest way for them to get exposure is through miners, not physical. So I think the miners' time will come. You just have to be patient and make sure you don't leverage yourself, because you're going to get enough leverage because of the moves. What I'm trying to say, don't borrow money to this.
Yeah, I mean, even pure play, just physical silver, I think is arguably leveraged enough. But you mentioned the family offices, just to finish. I saw that global family offices are investing 35% in equity. They're still investing 22.4% in fixed income, 7.3% in private equity, 3.5% in real estate, 3% hedge funds, and only 0.7% in commodities. And that's including mining companies and physical gold and silver. So, if that can really propel the gold and silver markets, we really are just getting started. And I think that's a really optimistic note to end on, Mario. So unless you've got anything else to add, we'll park it there. But please let us know where we can find your links and keep up to date with your work.
Yeah, I'm on YouTube at Innecco64. And I also, I'm pretty active on X or Twitter. And the handle there is @Innecco1964.
Perfect. Okay, we'll put those in the description, Mario. Thank you for coming on. And thank you for watching, everybody.